Hello and welcome. I am Jonathan Jay from the Dealmakers Academy, and every week on Dealmakers TV I'm interviewing people who buy businesses for a living. I'm interviewing successful deal makers and professional advisors, all with information, tips and tricks to help you buy a business successfully. Today we'll be meeting Perry Offer. Perry and I worked together for a 12-month period where I helped him buy businesses, and then he went off and bought two very successful, substantial 7-figure businesses within a 12-month period. And today we're going to find out how he did it and what information he can share to help you do exactly the same. So Perry, welcome to the show.
Thank you.
Let's start with the big takeaway. So during the time that we spent working together, tell me what you took from that. What's the big idea that you can share with our viewers today?
Well, I think that was probably the conviction that this was something that I could do. It wasn't something that I had huge doubt about because I'm reasonably confident anyway, but the reason I came to the first meeting and then signed up was that it gave me access to someone with experience such as yourself. So mentors are important in any walk of life, but in this one I felt it was particularly important. And also plugged me into a community of like-minded people that were looking to do the same thing, so that there could be an exchange of ideas and approaches from people who've had more or even less experience than I do. But there's always something to learn from like-minded people. But the takeaway, the primary takeaway was, yeah, I can do this. And so it helped me decide what I wanted to do next.
Interesting, because the 4 quadrants of being successful at buying a business are having the knowledge, having the confidence, having the deal team, and having the deal flow. And I think being part of a community gives you a benchmark as well.
Yeah, very much so. Particularly the knowledge piece was virtually completed by my engagement in this. That was one of the reasons that I wanted to plug into a mentor and a community. And also the access to a network of advisors just shortens the whole period of time in which you can get things done. So that was also an advantage as well. Confidence I kind of had, but those 2 things in particular were important reasons for me to sign up.
Yeah, very good. So let's look at the journey, if you like. You've bought 2 substantial businesses in the last 12 months. I know that one of them you can't really talk about too much because I don't think it was the Official Secrets Act that you signed, but it was a quite a sensitive business. So we'll park that one, but we can talk about the other one. What was the first step for you? After we'd spent some time together, you'd learnt the process. What did you go out and do to start sourcing these businesses?
Signed up to a subscription from Dun & Bradstreet, access to a corporate database where you could filter sectors and companies and get the information and down to a fairly narrow pool that would be of interest to you. That helped me get down to 2 sectors in particular. One, supporting housing. Okay, so lots of dynamics in the marketplace at the moment. It means people are spending money on their houses as opposed to moving. That's going to continue. And then the other one was the motor trade. And I saw opportunities in both those sectors, particularly for retirement sales, because there is this demographic that we're all operating against, of people getting older, and their businesses are coming up for sale. So that was step number 1. Get yourself a couple of sectors identified where you think you could make a difference. There's an opportunity, and also they're personally motivating for you. There's no point doing a deal for deal's sake. You've got to. You don't have to have an intimate understanding, but you certainly have to feel energised and excited enough by the sector that the business is in.
Sure.
So that you can commit and give it some passion over whatever period of time you choose to give it.
Sure. So it's important to start off with a strategy, isn't it?
Yes, it is, yeah.
And I suppose a good way of starting off any strategy is to begin with the end in mind.
Yes.
And I know that you've shared with me that you have a 5-year plan.
Correct.
Would you like to tell us about that?
Yeah, I think I'll reach the point where I'll have done enough in about 5 years' time. And I think for me, it's about, I've been reasonably successful, so I'm not stressed by any means. But there's one last hurrah. I'll know when I'm ready to stop because I'll run out of things to say. That's when I'll know when to stop. Maybe it will never come, but it feels like 5 years at the moment, and that is really about my own personal legacy. I want to leave for my own kids. Younger generation are finding it harder than we did. And that's another question for another day as to why, but they are. And so I want to make sure they're sorted, and also that they feel sufficiently well endowed financially that they can have some grandchildren.
And I think this is an interesting point, because occasionally on LinkedIn I get a little bit of pushback from people who say, well, you're just buying businesses to make money, and that's all you care about, and it's just capitalism, and you don't. It's very selfish.
It is capitalism. It's self-interested. But is it really about the money? No, it's about achievement.
No, I'm very similar to you. I'm past that point.
Yeah, absolutely. I understand it. It's achievement.
A little bit more money doesn't actually going to make any difference to my life.
It's about achievement. It's about continuing to pursue the principal reason you feel you get up in the morning.
Yes.
I get up to lead.
Yes.
I've known that for years. My job is to say the things that other people can't see or won't see, hear and say. So it's just another extension of that, which I've been doing for 40 odd years anyway.
So tell us about the type of business. So we've got the sectors, but tell us about the traits of the business that you feel makes a good acquisition target for you.
I think I'm very interested in retirement sales. I think they are good opportunities because the clock is running for that individual. They've reached a decision point where they feel it's at least something they want to talk to someone about. And so there are fertile ground for opportunities there. The next thing, I guess, is you've got to be, for me, it's got to be fairly obvious pretty quickly in the course of the conversations how you're going to get the business to grow. I'm really only interested in situations where I can see the opportunity to double the size of the business over 3 or 4 years. Because if I can't, it's not going to be personally motivating for me, which means I'm not going to generate an adequate return, particularly for any investors that choose to back it in some way, shape or form. But also from the purpose of the perspective of the guy that's selling the business, I'm not securing the future of the business for him. And that's important. I'm not interested in spinning anyone a line. When I go in and say, look, I'm going to take to a retiring owner, not only am I going to protect the legacy of the business, but I'm going to take it on a journey that you never ever believed might be possible for it. I want to be in earnest about that.
And that buy-in is important, because what we always say is that if someone doesn't believe in you, doesn't like you, doesn't trust you, then they're not going to sell their business to you. And especially at the retirement, if someone's owned a business for 10, 20, 30 years, sometimes even longer, then they want to know that they're handing the baton on to someone who's going to continue their good work.
Yeah, correct. And my own integrity doesn't permit me to spin someone a line about what I plan to do with it. I always say to people, if you'd like to retain a small stake and have a second bite of the cherry, that you believe in me enough that you're prepared to do that, then we can talk about that.
Yes.
If that's what it takes to get the deal away, absolutely no problem, particularly if the owner has been a figurehead owner for some years, has been the public face of the business. You want that person around for a while saying tremendous things about you.
Yes.
And if that means they keep a little bit,
yes,
no problem at all.
Yes.
Because there's always enough to go round if you pick the right opportunity.
So you're looking for businesses with untapped potential.
Yes.
That you can see the method by which that potential can be unlocked. So the potential's already there, it's just that the current owner hasn't identified, or maybe doesn't have the enthusiasm or the energy to identify it and follow through on it.
Correct. It's often a case that for whatever reason, usually as some kind of risk mitigation strategy for the business, they've made the business a little bit more complicated than they needed to.
Yes.
I mean, we live in an age where customers now want to buy from specialists, and they can do so. The web, if you look at the way we buy ourselves, the web has made it very easy to go online and buy something from a specialist website in a heartbeat. Even Amazon is a specialist in logistics. That's why people buy from Amazon. It arrives
because
on
we
time.
know we can get it today or tomorrow.
Yeah, exactly. So often you find a situation where the potential is there, it's masked by the diversification they've pursued. And so you need to be able to very clearly identify, okay, if we were to focus on those two opportunities, because we can see from the way the market is moving, there are significant growth opportunities. We believe we've got some competitive advantage that will enable us to grow within that sector. And the only thing stopping us from capitalising on it is our willingness to focus our energies sufficiently such that we can use our capital to drive through that space more deeper and harder than we have done previously. And quite often, this feels counterintuitive to a lot of people, because a lot of people's primary exposure to risk strategies is if they build something like a stock portfolio, where having multiple eggs in multiple baskets makes sense. But in an age when customers in B2B in particular want to buy from specialists, it makes no sense at all. And it's a quick route to failure if you're not careful.
So could we then say that you look for businesses that have lost their focus,
Yes.
have maybe diversified to the point that they're doing unprofitable, unproductive activities that are eroding the profitability of the company?
Correct.
And your approach, and I don't want to put words in your mouth, so correct me if I get this wrong, but your approach is to refine the business and to focus it, and that in itself releases that additional profit.
Correct.
And propels it into the future.
Correct. Yeah, it releases capital that's tied up in unprofitable activities, which gives you money to turbocharge, if you like, your route into the marketplaces where the two key opportunities you've identified lie. And in pursuing those kind of strategies, you're not talking about situations where you have to invent something entirely new from scratch.
Sure. And that's the hard work. That's a startup.
Yeah,
and we know that startups are very hard work and very high risk.
So the thing that makes this kind of focusing strategy work is that more often than not, you're looking at what I call patch of blue sky opportunities, not blue sky opportunities. We're not building an iPod. Okay, no one knew they needed an iPod till Steve Jobs told them, and we're not all Steve Jobs, unfortunately. So us mere mortals, I think, have to put up with patch of blue sky strategies, and those are opportunities that exist within the current industry framework that for some reason aren't being addressed by anyone, or if they are, not particularly well. If you can identify one of those, and I'll give you an example in a moment, you can drive the business on the back of focus and the capital released, such that doubling the size of the business within a 2 to 3 year period is absolutely no problem at all. An example of a patch of blue sky opportunity would be from the very first business that I ran as a CEO, which was a ladies' hosiery business. Okay, manufacturing and losing money heavily, restructured it quite quickly so it got to break even, and the patch of blue sky opportunity we identified was lead time. We cut it from 3.5 weeks to 3.5 days, and we picked up £4 million worth of business, and all the margin from that £4 million went straight to the bottom line and completed the turnaround.
So you're taking your past experience in business when you've actually worked for other people.
Yeah.
And now you're saying, I'm doing this for myself, taking that experience,
Absolutely.
and I'm being the deal maker, the investor in the business.
Correct.
I'm not being the operational manager
Correct.
or CEO in the
So
company.
no, I'm being the principal now, and I'm not leaving money on the table for anyone else.
Well, and why not?
Yeah,
I mean,
absolutely.
I think people go through different phases in their life, don't they? And I think that quite often people always start off working for someone else because that's the most obvious thing to do. Then they get that entrepreneurial moment where they start their own business, and some people then start one business after another business after another business. As we know, that's hard work, and you can start a business, be successful, and then spend that money on the next startup and lose all your money. Or you can buy other people's businesses. You can do them in a relatively risk-free manner. We can structure our deals in such a way that means that we don't have to refinance our property to purchase the business. And I think that's the approach that you're taking, of course, of doing a de-risked acquisition, and then doing it multiple times.
Yeah, and certainly one of the motor sector, for example, is an obvious sector in which there are multiple retirement sales, and so therefore doing a kind of roll-up strategy there, holding company, keep the names of the individual businesses, but arrive at an equity structure in which some of the key players on each of those sites are tied in. That's certainly part of the plan for that sector, because the opportunities are there to be pursued, and if you can handle the conversations with the owners in such a way that if they feel comfortable that the legacy and however they express it, name people, is protected, they will do deals.
Yeah, absolutely. And you need to know how to structure the deal, because as long as you know more about buying a business than they know about selling a business, then you're going to be okay. If they know a lot about selling a business and you've got no clue about buying a business, then you're always going to get yourself a raw deal. So that knowledge and confidence comes into play there.
Yeah, it does. And in terms of, so I think the third leg for me of the deal making process, Number one was the alignment of values. Make sure you're both in it for close enough reasons. Number two, identify the growth path. I think number three is structure the deal so that you're making some money on the way in. And that doesn't mean that you're ripping someone off, but you're certainly coming up with a structure that doesn't factor in all of the hope that you can see in the growth path.
Yes.
Yeah, so it leaves you some manoeuvring headroom, and you get a deal that doesn't leave the business overly financially stressed while you are decluttering it.
Yes.
Because that will consume some cash, and it's not necessarily something that you would want to do overnight. You know, I've handled situations in the past where the decluttering and closing down some of the products that were built over time has taken up to 12 months.
Yes.
So, you know, be sensible about the structure.
And you're buying substantial businesses, aren't you? So therefore, there is more work to be done, but the upside is larger.
Potentially greater, yeah.
And I always say to people, it's a lot easier to buy larger businesses than it is to buy smaller businesses, because the larger businesses have better management information. They have better advisors. They don't have the sort of the local lawyer. They actually have a firm that can handle a transaction like this.
Absolutely.
And they're far more sensible, aren't they? Because they have clearly got to a certain point in their business, which means that they understand how business works.
Yeah, well, scale's important. You don't want to be buying anything that's subscale because it's still essentially a startup, and startups have their own problems. I'm not a startup guy. I've tried it once, didn't work. Once was enough. You've got to learn. You've got to understand what you're good at. I wasn't good at that. But no, if you can find something with substance, it gives you breathing space as much as anything else. It makes it more fundable, more easily fundable than it would be otherwise. Because something subscale, you're going to be immediately in the weeds.
Yes.
And that is not where you want to be. You want to have enough space around you to execute the strategy, the growth strategy that you've identified, and you need to be very clear about how long it's going to take for you to get that underway.
Absolutely. So let's talk about some quick wins that someone can have when they buy a business in terms of improving cash flow, maybe taking some money out of the business right at the start. So let me start off with a little example from just the other day. From an acquisition we made recently. The owner was on payroll, the owner's husband was on payroll, the owner's daughter was on payroll, and the owner's mother-in-law was on payroll. So immediately you take those four people out, and we've got four salaries that disappear off payroll. So immediately we've got whatever the sum of those salaries was every single month in additional free cash flow. Take out the owner's car, take out their holidays and their personal expenditure, take out their pension contributions, and immediately you've got something that's making money, and you haven't really done anything apart from buy it. So that's my starter for 10. Do you have anything?
Yeah, no,
anything
I think that's step number one. I think step number two is working capital. Squeeze working capital, particularly debtor books.
Yes.
I don't know what it is, but people are terrified of chasing customers for money. I've never had a problem with it. I actually think it's, I see it as a moral thing. From this perspective, you ring us up all month and you ask us to do 5,000 things. The one thing we ask you to do, pay on time, you don't want to do it. What is that about? The success to effective credit control is very simple. Number one, repetition. Okay, you do it every month on the same day, 4 days afterwards, 11 days, so they know you're going to be on the phone.
Yes.
Okay? So they know you're going to be chasing them. And step number two is, if you say you're taking them to court, take them. Never blink, because then they know you're bluffing. So you've got to be prepared to see it all the way through. And you know what? If you get that into their mind, we better pay them because we know they're going to be on the phone, won't be a problem. You're very polite about it, of course, but persistent.
Yes.
And, you know, bringing down the day sales outstanding by 25 to 33%, absolutely no problem.
So when you see a business with debtors, you look at it and you think, how much of that money can we bring in? But of course, when you're buying the business, the seller wants you to pay for the debtor's pound by pound. And you say, well, no, because look, they're out of term.
Correct.
The collectability of these debtors is in dispute. In actual fact, we need to put in a bad debt provision into the accounts.
Absolutely.
Which in itself reduces the EBITDA.
Yes, yeah, I mean, that's true. What I was talking about there was afterwards, but you're right.
Oh no, I'm before and after, both strategies.
But you're right. I mean, by let's say by presenting a case whereby you have a less optimistic view about the collectability of the debt book, you create your own headroom, and that's what I mean about, like, making your money on the way in.
Absolutely.
Yeah. So, and look, the obvious things, also other aspects of working capital. Can you get better terms from suppliers? Then you're now part of a more well-backed, fundable proposition that's pursuing a strategy of rolling up a number of businesses all together into a bigger group.
Yes.
Is there idle stock that it's not going anywhere, but it's worth something to someone that you're also paying to house, for space. Mm-hmm. So it's just there's in most cases it's no one big thing other than the growth opportunity.
Yes.
But that aside, it's a number of half a dozen smaller things that round up to make a significant amount of difference and create the headroom, a lot of the headroom that you need in the early days to do the repositioning thing.
So many of the people watching this will be thinking that the idea of buying a business is a very sound one, because if you own a business right now, it's the fastest growth strategy. You can double, triple, quadruple the size of your business with one or more transactions. But I know sometimes there's doubt in people's minds. They say, well, what if it all goes wrong? What if I pick the wrong business? What if I don't know what to do? What if I get stuck in the process? What sort of advice would you give to people who think it's a good idea but aren't quite sure whether to do it or not?
Where we started, get yourself a mentor, plug yourself into a community. Honestly, they need to do something like join your group.
Well, I mean, I wasn't saying that to
no, but it's true.
To lead you down that path.
No, but it's true.
Yeah.
I think it's true. You have to be honest about what you are as an individual, what you've achieved to date, and you almost need to do a gap analysis. Mm-hmm. If you're going to embark on this journey, what do you bring to the table, but then what else do you need? So I talk, when I meet owners, I talk to them, I look for, and also talk to them about what I call the tripod theory of management. A business is like a tripod. It has 3 legs: commercial, operations and finance. So what I'm looking for is a feel for which of those 3 is driving the business, because if it isn't sufficiently well balanced, there's a danger it will topple over. Mm-hmm. All 3 legs need to be raised to the same height at the same time. Otherwise it's very unstable. At worst, it falls. Mm-hmm. So certainly when, as an individual approaching the deal-making process, you have to be clear about which leg of the tripod you're coming from.
Yes.
Where are your strengths? Because you need to look at the other 2 legs and make sure that in some way, shape or form, you've got people around you that you're going to bring to the table,
yes,
whether they're as consultants or advisors or whatever, pre-deal, post-deal, that are going to help you stabilise the tripod that you're buying
It's not
into.
a one-man job, is it?
No, it's not. It's not, particularly if it's something that has some substance, because you'll need support to help reposition it. You can't do it all.
And the thing is, the upside can be so huge.
Yes.
Because one deal can have a life-changing effect.
Absolutely.
And life-changing has different definitions for different people. It might be an extra 10,000 a month, or it might be a business that you can sell and pocket a million plus.
Yeah.
But it's worth it to put that effort in.
Totally.
Because the outcome can be so,
absolutely.
huge.
And if you're worried about, if your deal isn't sufficiently well structured that you can afford that expenditure, that you're worried about it, think again. Because that's not a well structured deal. That's not a well structured deal. Because you're being unrealistic with yourself about what it's going to take to make it work.
So, final words of wisdom. What have you learned? If there's one thing that you've learned that you could pass on to our subscribers?
Be prepared to walk away.
From the deal?
Yeah. If you can't find an alignment of values between yourself and the owner, if you can't find, given that you get that, if you can't find the growth opportunity, if you can't find, you will never get to stage 3. If you can't find those first 2, you'll never get to stage 3, where it's worth even constructing a well-structured deal. walk away. There's plenty more fish in the ocean.
So what helps you walk away? Is it deal flow? Does it come down to having lots of options on the table?
Yeah, absolutely. You've got to generate your lead pool. And honestly, you know, I'm not doing a plug for D&B, but I got a fantastic deal where I got access to their database for £1,000 a year, and I could download 25,000 leads. Okay, didn't cost me until I downloaded them. Okay, Go and do it. Do your research. Identify your sectors, the ones that motivate you.
Because the deal makers that I come across who don't seem to do very much are the ones that say, oh yes, I looked at one business 3 months ago and it didn't come off, and I haven't really done anything since then. Yeah. It requires some commitment.
Research.
And if you've got half a dozen deals on the table at any one time, you can buy a business.
Absolutely. It's research, it's mail shots, it's phone calls, and you'll generate a lead pool pretty quickly, because this demographic of retiring people is out there. Yeah, it's real.
So what do you say, because you're an action-orientated individual, what would you say to someone who says, well, I haven't got the time. I think that buying a business is a great idea, but I'm not sure if I've got the time to do it.
Go back to work.
Okay.
That's what I'd say. You're not ready to do it. Yeah. If you're committed to it, you'll find the time. It's like anything else. If you're committed to anything, you'll find the time.
If it's important enough, you'll find the time. Time is never an issue if something's important.
So I hate gardening, right? But once a week, I have to find time. I love gardening because otherwise I'll get it in the ear from my missus. If you're committed enough, you'll find the time. It's nonsense. If you're not prepared to find the time to find a business to buy, go back to work. You're not ready yet.
So, Perry, if people want to get in touch with you, how do they do that?
Email me at perryoffer@timetoexit.co.uk.
Perry, thank you very much.
Thanks, Jonathan.
So that was Perry Offer. Next week, more deal makers, more professional advisors, more people who can help you on your journey to buying a business. I'll see you next week.